There's a huge supply-demand imbalance in the market, which will only be corrected by far higher prices. And the thing is that the other thing I keep pointing out to people is the fact that once we do reach a situation where we do run into this brick wall and prices go to, let's say, some fantastic three-digit number, and I'm not discounting any numbers that have been thrown out there. My number is somewhere between $300 and $500 an ounce. The thing is, even if silver price went to $300 an ounce tomorrow, when at some point in the future, whether it be 6 months from now or a year from now or whenever it happens, when you're going to be looking at a silver price of $390 an ounce, does it really matter how you time this, or whether the spot price is this or the premiums is that? It doesn't matter, because I guarantee you, whenever you go to sell, when the silver is some three-digit number, fantastic three-digit number, not only will you have no trouble selling it.
Longtime metals analyst edsteer lays out why the structural imbalance in silver is reaching a breaking point. Decades of undersupply, industrial strain, and the disappearance of above-ground inventories have created a market that cannot be stabilized at today's prices. As he explains, once the physical system finally hits the wall, the adjustment won't be incremental. It will be explosive. An actual repricing event could send silver into the $300 to $500 range, and at that stage, the day-to-day spot price becomes irrelevant. Whether the market pauses at $300, surges to $390, or spikes beyond, the real message is that timing becomes secondary to positioning. In a three-digit silver world, liquidity won't be a concern. Buyers will be lining up, not stepping back. What matters now is understanding where this market is heading before that repricing arrives. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
The paper market has controlled the price for like 50 plus years in the case of gold. And what they're doing, of course, is highly illegal. I mean, there isn't a major bullion bank out there, whether it be in Canada, Europe, England, or the United States, hasn't been fined heavily and found guilty of rigging the prices of precious metals. But they go ahead and do it anyway, regardless of whether they've been fined or not. And there's no penalty. The problem is that the West generally, okay, and I'm talking about principally the U.S. and Britain, they've become so corrupt now. The CFTC is supposed to be watching over this. Terry Duffy over at the CME Group is supposed to be watching over this. The Securities and Exchange Commission, you name it, there isn't a commission out there, or the judicial system. Everything has been totally corrupted, and they basically just turn a blind eye because they know that the moment they allow gold and silver prices or commodity prices in general to rise to what they should be, then the paper financial system is going to be very close to coming to an end, because then everybody, and it's happening right now. I mean, we're looking at gold and silver basically remonetizing themselves. And the problem is that when this thing finally does break and the silver price, the silver supply disappears and demand overtakes it, we're going to see that price anyway. They're just delaying the inevitable, but it's highly illegal. But there's not a thing that, the major powers that be in the government or in the regulatory agency are going to do, because they've all been captured decades ago. And they basically, like I said, turn a blind eye and throw some fines out there, but it still goes on, and all you have to do is look at the charts, gold and silver charts from this morning to see that happening. London ran out of silver, so this means that there's a huge supply-demand imbalance in the market, which will only be corrected by far higher prices. And the thing is that the other thing I keep pointing out to people is the fact that once we do reach a situation where we do run into this brick wall and prices go to, let's say, some fantastic three-digit number, and I'm not discounting any numbers that have been thrown out there. My number is somewhere between $300 and $500 an ounce. The thing is, even if silver price went to $300 an ounce tomorrow, okay, or by the close of business today, the mine supply wouldn't change one troy ounce. It would still be 820 million ounces this year, 820 million ounces next year, and 820 million ounces the year after that, because there's no new mining production coming on that's worthy of the maybe 2 or 3 mines, which making, they're going to mine 2 or 3 or 4 million ounces each per year. I mean, it just isn't even going to touch the supply-demand fundamentals. So it doesn't make any difference what the price go to. The supply will remain basically unchanged. But what will change, and this is something that we've seen signs of in October, and you're sure aware of it. Anybody in the retail business was aware of it, whether it be in Canada or the United States or in Singapore or London, is that demand just went absolutely ballistic, and everybody was out of everything. The mints were backed up, and it was just a phenomena that where everybody was just gasping for breath. And the thing is that the next time it goes, when we see silver at $60, $70, $80, it will be a demand that was impossible to supply. It will not be able to be satiated. You're just going to run out of supply, and the retailers are going to have sold everything they own, and good luck getting any more. When at some point in the future, whether it be 6 months from now or a year from now or whenever it happens, when you're going to be looking at a silver price of $390 an ounce, does it really matter how you time this, or whether the spot price is this or the premiums is that? It doesn't matter, because I guarantee you, whenever you go to sell, when the silver is some three-digit number, fantastic three-digit number, not only will you have no trouble selling it, but I guarantee you'll be able to sell it for a premium, because you'll be the only person. There'll be very few people selling. It'll be all buyers and no sellers, so you'll have no trouble selling. So, I learned after a quarter of a century of buying this stuff, and I've been buying it for a very long time, that I look back and say, I remember the most important thing I remember is I was haggling over this 5-ounce round, and I ended up paying $35 Canadian for it. And I thought, gee, I hope I was making a good deal. I still have the coin. As a matter of fact, I have it on my desk. It's one of those things I remind myself that I stew over something for nothing.
Veteran metals analyst edsteer makes it clear that silver's long-suppressed price structure is entering its final phase. For decades, the paper market has dictated pricing, even as central bullion banks were repeatedly fined for manipulation. Yet the system continued because regulators, exchanges, and oversight bodies have effectively stepped aside. Now the imbalance is undeniable. Western vaults are draining, London is running short, and industrial demand is colliding with stagnant mine supply that cannot expand regardless of price. Steer argues that once physical shortages thoroughly surface, silver will reprice violently into the $300 to $500 range, with premiums soaring and available metal vanishing almost instantly. In that kind of market, the buyer-seller dynamic flips. Few will sell, and demand will overwhelm the system. Let's get into the interview.
You look at the Silver Institute numbers, and for the last 5 years, they've been showing a deficit anywhere between 100 million ounces a year and 200 plus million ounces a year. I think their number for 2025 was around 147 million or 150 million, something like that. Well, if you add up the last 5 years, you're looking at 800 and some million ounces of silver that has come out of above ground inventories, and that's a full year mine production that's been disappeared from above ground stocks. Now, sooner or later, you're going to run out of above ground stocks that people are prepared to sell at the current price. And that showed up in spades in London in October, where they just basically ran out of silver that was available for sale at that price. And of course, we saw the lease rates spike up to heaven knows what price, and the backwardation blow out by well over $2 an ounce. And there were frantic shipments from the COMEX in New York over to London. It came out of not only New York, but it also came out of every other exchange I can think of, including the Shanghai Futures Exchange. And I haven't seen the Swiss numbers for October yet. They should be out sometime in the next week or so, and we'll see how much they contributed to. But basically, they ran into what's called a force majeure situation, where silver was being demanded, but they couldn't supply it, and they had to put these people that wanted it on hold until they could fly it in from New York. So, there's the first foreshock that things are really out of kilter. They were able to fill the supply-demand requirements this time around when London couldn't do it. But what's going to happen the next time this happens, whether it be this month or next month or whatever? I mean, the silver just isn't going to be there to fill it, and sooner or later, the supply, which is only from the mining, it's about 820 million ounces a year. That's going to be the only supply plus recycling out there. So sooner or later, okay, the only stuff that's available will be what's the mining industry and the recycling produce. And that will determine demand, and it's going to drive prices to the moon.
Silver's structural deficit is no longer a theory. It is now visible in real time. As edsteer explains, 5 consecutive years of Silver Institute shortfalls have drained more than 800 million ounces from above-ground inventories, an amount equivalent to an entire year of global mine supply simply vanishing. October exposed the breaking point. London literally ran out of metal at the posted price, lease rates exploded, backwardation blew out by more than $2, and emergency shipments were flown in from New York, Shanghai, and other exchanges to avoid a complete halt in deliveries. That was only the first tremor. The next time demand spikes, there may be no rescue barrels left to roll in. When the market is forced to rely solely on 820 million ounces of annual mine supply plus limited recycling, silver's price will have no ceiling, only acceleration. If this gave you value, smash that like button, share it with those paying attention, and subscribe so you don't miss what's coming next. Stay alert, stay prepared, and keep stacking tangible assets.